Welcome to Subramani. I hope this video does not confuse you more than how confused you are now. My job is to confuse you, so if I do achieve that, I think it would be I would be very happy with that. One question which keeps coming up, which people ask, is when should I sell my share? I don't have answers for that, in the sense that I do not know when you should sell your share. I can share with you as to when I see generally people selling their shares. First, when some object is achieved, right? For example, they were saving this money in an equity fund, or they were buying equity shares to put their child through college. So when the child reaches class 12 and wants to join engineering or whatever, medicine, and they need money, that's a time for them to sell the share. So largely to support your lifestyle, whatever it is, to buy a car, to buy a house, to when you reach that position that you need that money, then you sell the share. There is no doubt about when to sell the share. If you need money, you sell the share. That's very simple. I have never sold a share. Let me add a caveat to it. Whenever I have sold, I bought something. I've switched. I've never sold. So suddenly one day, divinity struck me, and I said, okay, I will no longer hold shares of ITC because it is spreading cancer. My view, correct? My portfolio, my view, it didn't really matter, but I sold ITC at a very good price, and I entered Siemens, right? When you put some constraint like this on your portfolio, saying I will not invest in alcohol companies, I will not invest in tobacco companies, your portfolio return should go down. Fortunately for me, ITC went down and Siemens rocketed up. So I benefited, but that was an exception. It was not expected that I would benefit. I did not expect Siemens to go up so much, but I just added more Siemens. I always had Siemens, so I added Siemens, but that's luck. But I sold. I mean, why did I sell ITC? I sold ITC because I did not want to be in a tobacco company, but I had a lot of shares, and I had been holding ITC for a long time. So it's not that I made bad returns, I made good returns. And after that, ITC dramatically fell from 330 odd to 170. I did not participate in that fall. Of course, there was one more reason why I sold ITC at 330. ITC, ONGC, and perhaps SAIL. Yeah, these 3-4 shares I sold at that time because the government announced that it is going to sell these shares through an ETF. To me, I thought it was a disastrous idea, and I knew brokers could easily exploit it. Remember, I was a broker once, so I knew it was very easy to arbitrage that and make money. So I knew there would be selling pressure, but I did not know that the selling pressure would be so much. And I bought back Coal India at 117 and 119 and then 117. So at that price, with the sensational dividend yield, I just couldn't understand why people don't buy. But why I buy, I will do a separate video. So why I sold, this was the reason why I sold. I also sell shares when it goes up too fast for my comfort. For example, in I think in April 2023, just a few months ago, I bought BHEL. I had bought BHEL at 25, I bought BHEL at 50, and I bought BHEL at about 65, 66. And then it went to 114 in August 23, right? So in August 23, I exited, maybe just a few days back, but yes, I exited I think at 114 or something. By the time you see this, the price would be different because it will come up with a lag. But yeah, so that's what I did. So I sell sometimes because it has gone up too fast and I don't want it. So that is the reason why I sell. Again, it is a switch. I could be sitting on cash or I could be buying more shares, but I sold because it gone up too fast for my comfort. Sometimes when you want to rebalance, you think you've got too much of equity. Like for example, I target something like 85-86% equity. Sometimes I go beyond that, so then I have to buy some sovereign bonds, or I put money. I used to put money in that Nivesh Laksh fund of Nippon, but I no longer put because of the taxation. But now I've started putting money in a equity savings fund, where at least I know I'll get taxed at a lesser rate than my 30% slab. There are some portfolios, I mean, I don't think I will ever come below the 30% slab. It won't happen. My dividend will ensure that I am above the 30% slab unless the slab itself changes. And I will also be at in the educational cess, then there will be the surcharge. Sorry, I am digressing. So what is the reason to sell? That's what we should concentrate on, right? So another reason is when the company gets acquired. For example, when Mindtree got acquired by Larsen and Toubro, I was not very sure that the Larsen and Toubro management was capable of holding on to the people in Mindtree. Make no mistake, Larsen and Toubro is there in my portfolio. I think it's a good company. But whether they would be able to manage Mindtree, I was not very sure. So I sold Mindtree because Mindtree got acquired. I could also buy a company because it got acquired, right? So when a weak company which is doing well gets acquired by a strong company, if for example Air India were listed, Air India would be quoting at maybe 7 rupees or 8 rupees. It was a disastrous company. But when the Tatas take over, you know that it deserves a better price, right? So for example, that is the reason why I bought Yes Bank at 8, 9, 10, 11, 12, right? So I've been buying, and I'll happily maybe start selling at 30, 40, 50, whatever. I'm not even sure it will reach there, but now I know it has got strong promoters. That's the reason to buy, and that's the reason to sell. When the when the reason for which you buy a share is lost and the company is no longer attractively priced. For example, I bought Castrol. I bought Castrol at slightly under 100, maybe 99 or 100, and for a dividend yield. It was a good dividend yield. Now if it reaches a price of 150, it is hugely tempting to sell it off. Same thing for many companies which I bought for dividend yield. It has done extremely well. So my dividend yield story is not there. But it is not as though I will sell everything because the dividend yield story is over, right? For example, I have Apollo Hospital bought at 9 rupees. Yeah, you got it right, 9 rupees. I sold it at 140 rupees. Then I re-entered at I think 180 or something. Then I sold at 700. So it does not stop me from doing fresh deals in a company in which I have dealt with earlier, nor does it stop me from buying more. Like I said, BHEL, I bought at 25, I bought at 50, I bought at 70. Now partially I sold, hoping that if it comes down I'll buy, or I'm happy with the quantities that I bought at 25 and 50. So some shares I can just keep buying. I bought Indigo at various prices. It's still way below the market price today is way below my cost price, but it might go up also, because if I buy more at higher prices, my average cost goes up, right? So similarly, Zomato, I bought a lot at 47, 57, 67, but if I start buying at 95, 97 and 100, if I have a 5-year, 10-year, 20-year view, then I could keep buying. I may not sell. But suddenly, if there is a big jump too quick, too fast, then I could be selling. Then come bad companies, right? So when a company keeps changing its name or changing what it will do, it goes from when a company starts calling itself an Infosys, right? So it had happened. I don't know how many of you remember Aftech Infosys. When the minute I saw the company name, I said there's no reason why I would ever touch this company. Similarly, Brighton. I was seeing a video by Sucheta Dalal, how many times it has changed its name, changed its business. So any company which keeps changing its name, changing its business, changing its accounting year, changing its method of accounting, right? Any of those things are very scary. Or revaluation of assets. Any of these things are red signals for me, red flags. To say, okay, these are not shares which I wish to hold for a long time in my portfolio, so I will sell, right? So these are some of the reasons. Another reason could be when you've got too much equity and you want to go to debt, or you got too much into one sector, which could happen to me because I've got too many banks and NBFCs, and some of them I don't like now. So I could just look at it and say, okay, this has gone up too much. This does not deserve this price. The PE is too high. The PE is a complete bull market PE. So there is no way how this can sustain. So those could be the reasons. Overvaluation could be the reason, and undervaluation is when I was buying, like BHEL at 25, Tata Power at 30, Indian Oil at 76. I mean, it's unbelievable. Or Coal India at 119, 120. How could you just not buy it? The dividend yields were too attractive, so I kept buying, and I'm holding on to most of those shares. Yes, I've sold some Tata Power at 250, 260, and now it's at 230, so happy to buy it back. So sometimes when it looks just too attractive, you keep asking people why people are not buying. Or Reliance Mutual Fund. It was very clear that Nippon had taken over the management. It was in the public domain, but people were just not buying, saying, oh, something is wrong, that Anil Ambani company, so you shouldn't buy. But I made money, because when the people's perception is, oh, this is a bad management, and you know that the management has changed, there is no reason why you should not be buying. So these could be the reasons to buy, and these could be the reasons to sell. I'll do a separate one on how I buy, so that would be different. Thank you. I just did a video on when to sell a share. I completely forgot one important thing. When you think you have a better investment to make, right? You have invested in company A and you think you can sell company A and buy company B because company B is likely to give you better returns. That could be a good reason to sell company A and buy company B. However, if you're not very sure, sell A partially and buy B, and then keep looking at your theory and see practically what is happening. If it is not happening, then allocate fresh money to B. Don't sell A, but if it is happening, then just hasten the process over a 3-4 month process. I don't understand why people do an all or none. Sell all the A and buy all B. Why would you do it? Why would you sell, say, 30 lakhs of A and buy 30 lakhs of B? You can do it in lots of 5 lakhs and see what's happening, right? Or completely scale it down. Suppose you're investing 3 lakhs. You can do 50, 50, 50, 50, right? What is the hurry to sell all shares worth 3 lakhs and buy everything for 3 lakhs? Yes, you may have great conviction and you may not have money, but then you can do it slowly. The market always gives you a chance to buy shares, and if something goes up too fast, that's not a reason to buy it more, right? But of course, after buying it at a higher level, it can still go higher, but your moat and safety net goes down, and therefore you have to be careful. But yes, selling your shares because you've got a better opportunity to buy something which I had forgotten.